Traders, welcome back to another video, and in today's video we're going to talk about how to distinguish two types of uptrend structures and how to trade them correctly. Now the first uptrend structure we're going to talk about is the structure that we have in front of us. Even though there is bullish bias in this structure, we can see that it has still a trading range like feel. Notice we have push up, consolidating structure, and prices are resuming the bullish momentum. And this blue line 21 bar exponential moving average that we use as a supportive indicator only is pointing up. Now when it comes to behavior of uptrend, it is a continuous series of high highs, high lows, just like this bottom example. We have high highs, high lows, both trend lines are being filled nicely and prices are consistently pushing to the upside. But we can see that this is not how today's structure started with. It started with more of an example like this with massive bullish spike, consolidating structure trailing range, and second bullish spike to the upside, which means the uptrend structure is not healthy and we need to trade it accordingly, and we need to expect different result from price action perspective. So I'm going to show the first leg, which is this leg right here. We have consolidating structure, clear EMA, a lot of price swings up and down, and then we have second leg to the upside. Now we way overshot it, but the concept still remains the same. Once I see a structure like this, I see first leg consolidation, second leg out of trailing range. I'm not particularly expecting for prices to keep continuing higher just yet. I expect for prices to at least test this breakout area to correct strongly. Okay, for that reason, once prices are pushing below EMA here, we're not really surprised. Okay, now notice I'm drawing these channels on the chart because according to price action rules, trend line rule, after prices break the channel, traders expect for prices to create new extreme. And my goal is to not only draw the channels for the main bias, but also for the corrections, because I want to know when it is okay to resume the main trend. So prices are breaking below EMA, which is indication that we are reversing, because if EMA is going to hold, the uptrend is going to be the main pattern and we're going to continue working higher. EMA is not holding, we're breaking below, and right now we have a break of this downtrend and we expect new low for the downtrend, and also we expect for market to turn because we just had a larger two-legged pullback out of the trading range. So two factors helping me to identify the structure, and for that reason I expect for prices to continue pushing lower. I'm not looking for any long at this particular area. I expect for prices to go and test this breakout area. Now prices continue working lower, a series of low highs and low lows, and we can see a massive bullish push above EMA without prices even testing the breakout area. This is indication of possible bullish resumption, because normally you would expect for breakout area to get tested, but it didn't. It pushed above EMA and quite strongly, and after you retraced way over 50% of the initial downtrend, you forget about prices creating a new low. When you're observing a short-term channels, generally in trading ranges, after prices retrace more than 50%, 60%, then you want to abandon the idea of prices creating new extremes. So at this point, now notice EMA is getting flatter. I have a lot of up down movement. It looks like we have a leg up, trading range, leg up, and another consolidating structure. So I'm just focusing on my shortened channels unless I safely identify what is the main bias. And right now I have a shortened uptrend, which has a break new extreme. Okay, so trend line will play it out. I have a push below EMA confirming bearish momentum. I need to redraw the downtrend, and I have a break of a downtrend, and I expect for prices to create new extreme. And notice what I have. I have new low formed, first attempt to sell, pullback, second attempt to sell, so second entry short, new high, because I'm counting from the highest high, first entry long, pullback, second entry long, failure. So these are two high probability setups in one. Uptrend played out with a break new high, nice bearish bar, and it formed at the exponential moving average. Now this is a little bit more of an aggressive setup. Why? Because overall feel and the bias in the market remains bullish, but at this particular structure I'm following shortened trend lines, and we can see that we have a breakout channel, so we expect new low, and two high probability setups in one. Decent setup to take a chance on, but it was a few minutes before the news were announced, and you want to be careful trading around the news. Now we can see after news were announced, we had a massive push above EMA, and at this point on, you have to zoom out and you have to analyze the structure again. Okay, high low here, another high low, and we are breaking to the upside. So there is no denying right now that there is a possible wider uptrend. So if I'm going to take a look, I'm looking at possible channels, but it feels a bit too wide. When I was watching today's chart and I just didn't like the channel, I took a look at higher time frame to help me identify the structure. So right now we're looking at 10,000 tick chart, and this was the trend line that I found because it nicely fits and it nicely has multiple confirmations. Notice first two swings will set up the trend line, third swing will confirm it, and we have multiple confirmations, and it even fits off the highs. So this is a nicely fitting channel. Notice break of the uptrend, which you expect according to rules to create new high, and you have new extreme for this initial uptrend. This high is higher than the highest high inside of the channel, and after that we expect correction or possible reversal. Uptrend was strong, so we will most likely only get a correction. So this is how you can use a higher time frame to help you identify what is the main pattern on the higher time frame, and this is specifically 10,000 tick chart. So when you're unsure what the pattern is on 2,000 tick chart, you can just go and take a look, take a peek at 10,000 tick chart to kind of confirm your feel for the structure and what is the main bias. You don't necessarily want to take trades based off this chart alone because the risk to reward ratio is way too big and the market is fairly slow, but you can definitely use it to help you identify the bias and when the market is going. So I am going to identify the pattern. Now this is giving me a nice confirmation. I'm just going to copy it, put it at the top, and how nicely it is fitting at both sides. I have tiny little break here, which is what you don't generally want, but I have confirmation here, I have confirmation here, and since the channel is very big and broad, it can be slightly hair off, and it's not a big of a deal. As long as it fits nicely right here and right here, that's really pretty much confirming what I want to see. So at this point on, EMA is pointing up, structure is bullish, and I'm only looking for high probability setups to go long. But notice, once again, I'm going to zoom out, this is a very broad, flat, and wide uptrend. Now this is a variation of a strong uptrend, but once the channel is this broad, we have to approach it a little bit differently, and we need to expect a different behavior from an uptrend like this. It's very typical for a broad uptrend like this to have quite strong push phase and deeper corrections. A lot of traders may get tricked taking a second entry long high probability setup right after the push phase is ending without giving a chance for correction to play out. Okay, because notice we can see that this is basically just a bullish deep push up, stronger trend range correction, resumption, stronger trend range correction, resumption. Notice multiple small little corrections, but prices are slowly but surely working hard. This is very typical behavior on a flat uptrend like this. The safest way how to approach uptrend like this is to wait for the corrections to play out, wait for push above EMA, and take high-low confirmation setup, which doesn't always come every single time, but it is the safest way how to approach the market. Because notice we have new high, which I always start counting from each new high because I'm looking for high probability setups. First attempt to go long, pull back, second attempt to go long at the EMA. But I have short-term downtrend in play. So there is a possibility that we're going to create new extreme, and we're going to create a second leg to a new low. We have first leg down, correction, second leg down. Market likes to move in pairs of twos, and there are going to be two-legged pullbacks. So I cannot take the second entry long, and I cannot take high-low at the same time as well, because it is a doji bar, too much overlap, it is stacked, and it is way too high up of this entire move. Okay, because in flat uptrend, once you exceed the last highest high, you need to expect stronger correction. Okay, so this is the highest high at this point on. First leg down. We haven't touched the EMA since this very bounce of this trend line. So this is a strong, steep push phase, and we expect deeper correction. Prices are going sideways. We pushed above EMA, and this setup is quite advanced, quite aggressive, but this is a high-low breakout pullback. Because at this point on, we have a smaller trend range. This is a congestion, smaller trend range. And the way you trade these congestions, you either fade the breakout with the direction of a trend. If we break to the downside, you want to fade it back into trend range because it is with the main direction of a trend, which is bullish. Or you can wait for prices to break to the upside and take a breakout pullback. We don't want to fade it. We don't want to sell because it is against the main trend, okay? On an uptrend like this, you never want to counter and trade, even though it looks like market may reverse, even though you think you may pick a top, you have a nice signal bar, the market looks like it's going to tilt any minute. You never want to counter and trade. You're going to get trapped. Most beginner traders are trying to pick top. You're better off just letting the corrections play out and then jump back on board with the direction of a trend. This uptrend has not been broken just yet, and this is the main pattern for the day. So we broke higher, came back, tested a smaller resistance, and EMA is holding two decent bullish bar, two key entry points, high, low. But at the time when you're watching this, you're buying at the very high of the market, which is a little bit scary. So this is definitely more advanced, but you have enough reasons here following the rules for you to go long on this high-low breakout pullback pattern. Now we created another new high, and we have a first entry long, second entry long, downtrend working lower, break new low. We have first leg down, pullback, second leg down, another two-legged pullback, which is indicating depletion of the bearish momentum, and we have second entry long, high probability setup. Now I marked the second entry long because following the rules, there's pretty much not much wrong here. You only have to have experience here, and we're going to talk about that because I didn't take this trade myself. That doesn't mean that this trade is bad for the reason I'm marking it. The reason why I didn't like taking this trade, it's because how big this prior bearish bar was and how tiny this bullish bar was. When I was watching this big bearish bar, I wanted to see much stronger bullish bar. Okay, this second entry ended up being a loser just by one single tick. You just got stopped out by one tick before market reversed higher and the scalp was reached. So this is unfortunate. Technically, there's nothing much wrong with this setup. If you took it, you follow the rules. However, once this big bearish bar was so gigantic and such a tiny little bullish bar, that is a little bit concerning, and my gut feeling told me to wait, but it only comes through the years of experience. So I actually took my first trade for the day on this double trap, because once you see one tick lower, everybody going short too early is going to get trapped. This is double trap because everybody who went long too early just got stopped by one tick, and everybody going short on a failed second entry long just got stopped again or is about to get stopped. So nice bullish bar, much stronger above EMA, downtrend played out. So this is where you can re-enter and make your losing trade back, because scalp was made. You had to ride this out a little bit, but eventually scalp was made, and then you can see congestion, EMA flat, and you don't want to take any trade after that. You broke lower. Most breakouts will fail, but I don't think you want to go long in this mess. You pretty much want to wait for prices to push above EMA, give you high low, but you never get tick lower here, you never get high low, just market keeps pushing higher. New high, first entry long, second entry long, but you don't want to take it the same reason, just like here, because you don't have new low for the downtrend. Notice you have downtrend in play. At this point, don't notice how the structure is weakening. You're going way too sideways. Here EMA was pointing up, and here is pretty much flat. So once you see flat EMA like that, and each new push to the upside is weaker and weaker, this is where you definitely have to be patient, and you cannot force the entry. You cannot jump the gun and take entries too far up. Okay, this is typical in flat broad channels. You definitely need to just let this correction play out. You can see a flat EMA, so much sideways momentum, nothing feels good. You wait for breakout lower. Okay, this is good. You follow the short-term channel, but you never get no higher low here. You would have really preferred to push above EMA and get some nice tangible setup, but you only see prices working higher. Another scenario where you just have a sideways structure. Now I marked this setup. When I was watching this, new low, first entry short, second entry short failure. This was the setup I was expecting, but this is technically not a failed second entry short, because we broke the low. There we are starting the count from. So the count starts over here again. I'm marking this as an aggressive setup because it is confirming the main key entry point. Okay, the main trend line is strong, decent bullish bar. I really wanted to take it. I didn't, because quite, not following the rules per se, but since it nicely confirming the channel, advanced trader can take a risk because the downtrend played out. Notice you have first leg down, pullback, second leg down, market played out. You have additional last leg. Then you have push above EMA, and you have high-low confirmation setup, small little bar, and you have room to these highs. And this is important in uptrend like this. You always want to buy low, so you have room to these highs. For that reason, notice you don't want to go long on a failed second entry short, new low, first entry short, second entry short failure. This is where you don't want to go long because you're going long directly at the top of this smaller trend range. Okay, it looks like it is a wedge pattern. Notice trend line, wedge, trend is losing steam. I'm going to zoom back. I'm going to plot the midline and notice how prices are failing to reach the midline. We're basically going sideways, we're hugging the bottom trend line, and we're about to roll over. Trend is losing steam consistently. This is typical for wedge pattern, and this is why you have to be extra picky when you're taking a long setup and you want to buy low. You don't want to buy high, you want to keep buying low. So eventually market broke the main channel, created a break, new extreme. Now this is quite tempting second entry short. This is not my style of shorts setups that I like to take, because I for the most part really like sticking with the main pattern. And notice this is the main uptrend working higher, and after there's a break you expect for prices to just form new extreme. So the way I approach market is I wait for prices to finish the bearish correction and then just look if we push above EMA and resume the main uptrend. But I'm going to mark this setup for advanced trader because experienced trader can recognize what's going on here, because you can see that the uptrend played out with the break new high and you never pushed above EMA. And you have big bullish bar that ended up closing as a nice bearish reversal bar, new low, first entry short, second entry short. So it is definitely more advanced, not particularly my type of setup, but I can see these setups working and there's definitely a reason to take them for a small scalp, but you're going against the main trend, so it has some risks tied to it. Now, however, after price created break new low and you have massive push above EMA, completely disregarding like the EMA is not even there, big bullish bars, you have high low, nice big bullish bar off the EMA, off the trend line. You're looking for prices to create new high. You don't know that you're going to correct this strongly. You just see nice push above EMA, downtrend played out, and you expect main resumption of the uptrend. Quick, easy scalp. Then market continue pushing lower. I have to follow the short-term channels. I have downtrend, break new low, first leg down, pull back, second leg down to new extreme. So at this point now, notice downtrend played out. Break new low, indicating bearish correction is over. Two large legs indicating bearish correction is over. Notice the support is being established, which is typical. After you get a break of a channel, notice flat EMA, up and down, up and down, up and down, up and down. But I'm not looking to particularly sell just yet because the support is starting to be strong. So this is where you potentially start thinking about going long. After downtrend played out, support keeps holding, main bias is bullish, and according to trendline rule, you expect for prices to create new high. I'm thinking long. I'm thinking bullish. We have new low formed, first entry short, pullback, second entry short, failure. Fell second entry short above EMA, confirming the wider uptrend coming off the support. Uptrend needs new high, main bias is bullish, and downtrend played out too. This was my second trade for the day that I took, and unfortunately you guys can see I got stopped out before market rallied up to the upside. I really like this trade. I really thought that this is a quick, easy scalp. Downtrend played out with new low, so there is no reason for market to create additional leg down. You're coming off to strong support. Main bias is bullish. You expect new high. Felt second entry short above EMA. All the reasons following the price action rules. It was just one of those trades that you ended up losing, even though there were good reasons to follow the rules. This goes to show that you cannot take losing trades personally. You cannot avoid them. You just have set of rules that you follow. You have odds on your side, and if you keep taking these trades in the long run, you will end up on top at the end of the day. But you need to keep executing and you need to keep taking them all. You cannot cherry pick too much, and this was a decent trade to take a chance. Even looking back, I still like this setup. There was just additional push down. Market continued pushing higher. The next felt second entry short, which you would have entered, just formed way too far up, not closing at the EMA. And then you have second entry long, which was very tempting, very tempting setup, but not really truly touching the EMA. This is one of those gut feeling setups where you feel it's going to push higher, especially after support was proven again. And this is finally the strong move that you expected here. So if you took this trade right here, I can definitely see why. I'm just not going to particularly mark it, but definitely a decent setup here, following your gut feeling to go long here. After that, market is pushing higher. Notice you have a break, a new high for the main uptrend. But once the uptrend is so strong, this was a very big pattern. You don't want to be expecting straight away correction and back into the strength range. Okay, this is basically just a correction for this main uptrend to resume. So don't start fading a breakout. Don't start looking for prices to pull back into strength range. Just expect for more additional pushes to the upside, because EMA keeps rejecting every single time, and you can see what a strong uptrend this ended up being without any two-legged pullback at the key entry point. We have new high, first entry long, second entry long. We have a high-low confirmation of the second entry long. I took this trade myself because you close out tight, attempted to create new low, but the main channel held, EMA held, decent high-low, third trade for the day. But this is more of an aggressive setup. This uptrend was a little bit overextended and you just reached the new high for the main uptrend, so you need a deeper correction. You have two key entry points, so you figured it was good enough for a scalp, but you want to be careful because the main channel has new high and this was a little bit overextended. So I hope you understand why this spike in a channel didn't continue working higher. First leg consolidation, second leg, the broader channel was being established, and notice you are expecting for market to push higher at the top of a trend channel line, but you don't know it's going to have this channel just yet. All you're following is this structure, first leg, correction, second leg, and you expect deeper correction. And only after a series of higher lows here, the broader channel is being established. And the way you trade these flat channels, you cannot buy at the very top. You can expect stronger, deeper corrections. Buy low, wait for these corrections to play out, and try to buy low before you exceed the new high. Because after the new high has been exceeded, two-legged pullback may have a stronger correction. Other than that, price action rules, you can see, are being followed perfectly. The trend line will break new extreme and the correction is working like clockwork.